Hi guys, welcome to the Pivot Trade, the channel that teaches you how to benefit from trap traders and become profitable. Now we will be analyzing Nifty today. Today is the 7th of June 2022 and let us start with the first candle. So how is the first candle? It's a huge red candle, and whenever you see a huge red candle that is closing outside the previous day's range, which you can see is right here, then you should always be very careful before opening such trades. So before you see that or before you think that you can successfully open a short trade in this first candle itself, you should wait and see if that is fitting in your risk reward ratio. So if you have an SL which is this big, I don't think it can fit into anybody's risk reward ratio. So if that SL is that big, you need a huge drop to ensure that you're getting a twice bigger reward than the risk. So this is definitely not the place to enter, and this is definitely not the place to short. So when such things happen, you should always understand that the fact that the price is opening inside the previous day's range and breaking out of it immediately, you should wait it out to see if there is any sort of retracement or a pullback back to the day's high, which is this level. And why should you wait? You should wait because you need a better risk reward. Okay, so given the fact that on this particular day you had the PDL here and shorting here and keeping the SL here, and what would be the most natural place to collect the profit? It would be the S2 pivot, right, which is right here. Now around the S2 pivot, which is here, if you collect the profit at this level, even then this particular SL and this particular reward is not a very conducive risk reward. It's still not a very good risk reward. And so you should always understand that you cannot really have your SL hanging somewhere in between here. Okay, this is not a good place to keep your SL. So if you keep your SL somewhere around this area, or you keep your SL somewhere above this particular candle, it's not a good area. Although you see that there is a pin bar here, but usually what happens is if the price opens with such a huge red candle and it happens that there is no follow-up after this and you are shorting somewhere at this level keeping your SL up here, then again this wick would have taken your SL, and then you would think that my SL is taken every time and you would wonder who is taking your SL. That is what new and inexperienced traders do. But what do professional traders do? Professional traders do not go and short here. Professional traders do not keep this big an SL. They will wait for a perfect entry. And where would be the perfect entry? It would be at a higher price here or somewhere around here, where they can actually see a pullback and then you can see a particular reversal candlestick around this area, and then they can short at this point and keep their SL up here. Then that is a short, very small SL, and then the best place to collect the profit would be back at the day's low, which is at this particular level from where the price had reversed. Now see, the SL is so small here. This is the SL and this is your profit. So now you can see how small that SL is and how good that risk reward is. So this is the way to ideally trade on big candlesticks. But you know, this was not exactly a very high probability trade either, because you could see that the CPR was not very wide today in Nifty, and so the probability of the price reversing after it hit the day's high was also low. But that does not mean that you should go ahead and short this candle either. Why would you short this candle? Because it is making that pattern exactly at the previous day low, right? And the previous day low is an important location. So just like the CPR, the previous day and high and the previous day low are very important locations. But still, that is not a very good entry. It is not very good to go short on this candle either, because you cannot be very sure whether the price will bounce from here. Because see, because of the fact that the CPR is narrow, then had price reversed up to the high of this particular candle, and if it had broken out of this particular high, then what would have happened is, if it had formed a nice green candle out here like this, which would have been a breakout candle, then what would most probably have happened was that a lot of SLs around this area would have been taken out. These SLs triggering would mean a rally to the upside towards the CPR. And since the CPR was narrow, it would have probably gone through the CPR also. This candle had a lot of sellers in it. So a lot of sellers sitting here will have a lot of SLs sitting here. And what are SLs? They are buy orders in this situation. And so that can happen. So that is why I said you should not go ahead and short this candle at this level. You should wait to see if price reverses, and then at this point, if you see that there is any sort of a reversal candlestick pattern at this level, if you see something like this where the candlestick shows you another reversal candlestick pattern, then this is a good place to short, because then your SL comes that much closer to you. And then see, you had a day low here, and at the day low itself you could have booked your profit, or you could have waited for the contact with the S2 pivot also. So that was the way to trade had price reversed to the high of the day. Okay, so depending on that, let's see what sort of price action we saw right since the beginning. Now this being a very big candle, this candle actually went up, reversed into that particular zone here, and then it again reversed from here. Okay, so here what we did was we saw this particular reversal candlestick, then the price came down, it showed volatility, it took some support here, bounced up, again it fell from there, and it came and hit the S2 pivot. And then you could see that the entire day there was a lot of volatility and price kept going sideways. So this was the gap that was left to be filled, which was filled here. And after the gap was filled with this particular candle, let me just delete this. Yes, see, the gap was filled with this particular candle, and when this gap was filled, because after the gap is filled, this is a breakout kind of a trade. When everybody jumps into the breakout trade, what happens is again they short this particular candle here, and after the candle is shorted, then the price reverses and it takes away the SLs in this area, and that is why the price went up again. It obviously did not go up to the day high, but there was a good climb from here and a good recovery. And you can see some big green candles after that. So we will just delete this gap now, and we will also delete the level of 16415, which we had marked as a support. The 16400 was broken today, and then price came back, and now it is closed at around 16400 itself. So a lot of volatility around the 16400 level. A big fight is going on that area. And let's see what sort of levels we need to mark. We will extend this particular Virgin CPR forward. This is coming from the 30th of May. Okay, you can see that we have a very wide very narrow CPR tomorrow. It's almost one line only, and we will push this Virgin CPR forward. Just draw this forward, and we also have a Virgin CPR from today since it was not touched, so we will just simply extend this Virgin CPR like this. So just mark this particular Virgin CPR, which is coming from the 7th of June, and we also have a Virgin CPR coming from the 6th of June right on top of it. And this dotted line which I had marked here was because this price was retested here yesterday, and we had seen a bounce coming from it here also. So the very first candle blew through it, and that is why I had marked it in dots. I had said that the level becomes weaker and weaker after multiple touches, and usually I have seen in my experience the level that is retested multiple times or 2 or 3 times, then that level keeps getting weaker, and mostly in indices a level which is retested a 3rd time, the level is broken mostly. So only the second retest at a demand zone or a supply zone works. I'm moving into the 15-minute time frame here to check what sort of levels we need to mark. So what we will do is we'll mark the first candle's high here, and we're marking it as a supply zone because it has shown us a fall right since the day open. See here, you can see a 140 point drop, so not a major drop from there, but more importantly you can see that it is an open is equal to high candle. So such candles are very important. It means that it is a strong zone there from where the price has fallen, so you can mark it as a supply zone and keep an eye on the price action when it comes to that level again. So the price has not really fallen too much from there, less than 150 points, but still that area will be important, and you will want to ensure that you don't have any major trades open at the previous day high, that is today's high, tomorrow, or any time that the price goes up to this particular level. So whenever that level is retested, keep an eye out on that level and see if there is a breakout pattern there, then you can go long, or if there is a bearish pattern there, then ensure that you are very sure while you are going short on it, because the price might reverse from that level, the level from which it has fallen today. So I think this is it for the price action analysis of Nifty. Now we will turn over to Bank Nifty. And you can see in Bank Nifty that it was a pretty sideways day today. We did not see that major fall that we saw in Nifty. Unlike in Nifty, we don't see a major fall in Bank Nifty. We had marked this particular demand zone here, a level which was coming from yesterday's price action, because it had made a very big green candle here, and this red candle actually broke that particular demand zone. But you can see here that the demand zone, the breakout was not really very strong, and the price hasn't really fallen the way it should have when breaking out of a demand zone. So that makes me believe that the demand zone was never too strong, and so that was not really the level from which you should have taken a short trade, because you can see that it has made a strong green candle, but there was no follow-up yesterday. See how the price kept struggling to go up. So that is why that demand zone was never too strong, and that is why when I saw such form of bullishness here, I was certain in the morning itself that this particular day is not going to be a trending day in spite of a narrow CPR in Bank Nifty. So you can see how after the red candle broke through the S1 as well as the previous day low, the price has actually gone up from here a little bit. Then it has actually taken some bit of resistance at this point. It has broken into the previous day's range after breaking out of it here, and then it has taken resistance and fallen from here. So you can see how that particular price action is, how volatile it is. And if somebody would have gone short on this particular candle, that SL would have been taken out here if the SL was on the high of this particular candle. And if somebody went long after the candle actually, or the price actually broke out from here or broke out into the previous day's range, then that those SLs would have been taken at this area also. So a lot of volatility, and SLs on both sides might have gotten hit if somebody is trading particularly on PDH PDL only. And in spite of a narrow CPR, you can see how price has stayed sideways the entire day. So we will see what sort of levels this day gives us in Bank Nifty. We'll check on the 15-minute time frame if we have any important levels as of this day. I do not see any important levels. Even in Bank Nifty, we have a very narrow CPR tomorrow. So keep your bias towards the breakout side, not towards the reversal side at all. And we have a very narrow CPR here, so that virgin CPR, it really doesn't make any sense to mark it, but I'm still marking it. Just ensure that you don't keep it active after tomorrow. Only if tomorrow the price returns to that area, keep an eye out on that price action there if it actually does work. But I will not really recommend you, because it doesn't have any confluence of any other level at that in that zone. So if this R2 level would have been within that virgin CPR coinciding with its central pivot, then it would have been a different story, but we see that the R2 pivot is above that level, so I don't think that is going to be a very important level. And we can see that the previous day high and the S1 are completely coinciding tomorrow, and we also see that the S1 and the previous day low are completely coinciding with each other. So no real levels to mark here. I don't think that the previous day high and the previous day low, that is today's high and low, are very important levels at all. But since they are anyway important on every day basis, we should be marking them, but they should not be marked in any red or green color, because they are not particularly demand or supply zones. Okay, so all those levels otherwise that we have marked will be extended forward. There is no reason to delete those levels. And I think this is it for the price action analysis of Nifty and Bank Nifty. If you have liked it, please hit the like button, subscribe to the channel, and hit the bell icon so you're notified each time I post a new video. Thank you for watching this one, guys. I'll catch you in the next one. Bye bye.